Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a fantastic day. As always, comments, likes, and subscriptions are appreciated as they do indeed help the channel. Welcome back to another News I Missed, where I go over news I missed. And without further ado, let's jump right into it. Polygon has closed a $450 million raise. Sequoia Capital, one of Silicon Valley's oldest and most successful venture capital firms, has led this round of fundraising. Venture capital firms are definitely taking notice of Polygon. The Ethereum scaling solution announced it had closed a $450 million funding round on Monday. Sequoia Capital, India, led the round, while other participants included SoftBank, Galaxy Digital, Tiger Global, Alameda Research, Animoca Brands, Spartan Fund, Dragonfly Capital, Variant Fund, and Kevin O'Leary as his own brand. Founded in 1972, Sequoia is one of the oldest Silicon Valley companies, etc., etc. Money, money, money. Commenting on the investment, Sequoia managing director said, "The platform of choice to build on the blockchain today is Polygon. Thousands of developers across a range of applications are choosing Polygon and their complete set of scaling solutions for the Ethereum ecosystem. This is an ambitious and aggressive team, one that values innovation at its core." Sequoia Capital India is thrilled to lead this significant financing round. According to the statement, Polygon will allocate $100 million of the fund towards the development and onboarding of new projects, and apparently the rest will be buffer money, as they have hired 240 people to their team. You might be noticing a trend that's quickly picking up. Polygon is in the news all the time now. As we get closer to the idea of Ethereum 2.0 happening, there's also some Ethereum 2.0 news in this video as well. Polygon has more or less become kind of the answer for the short and long term as to helping Ethereum actually scale. There's so much happening on Ethereum at any given time. It's nearly impossible to, keep track of everything that's taking place on top of it. And the network Ethereum can't actually really hold on anymore. We've seen skyrocketing transaction fees of anywhere from $200 to $1,500 over the last couple of months, and it's not good for the platform at all. So as more people are looking to build on top of Ethereum and to use it, Polygon has kind of stood out as the most prominent leader in the space when it comes to making transactions kind of easier. Sorry for I'm thinking about so many things at once, but anyway, the entire point is, yes, they raised $450 million. I assume that this is only going to continue happening over the next couple of months as well, because you'll see, even when we do have Ethereum 2.0, Polygon is still going to be incredibly necessary, because if we're expecting Ethereum to be able to do tens of thousands of transactions per second sometime in the future, we will still need additional support because everyone is still building on top of Ethereum at the moment. Anyway, that's the Polygon has raised $500 million. This was not very popular news. You would assume that it would be, but it wasn't, because Elon Musk was in the news, so therefore that ends up taking precedent. Anyway, that's the Polygon news. And yeah, let's move on. Also in the news, crypto asset manager Valkyrie will have an exchange-traded fund with exposure to Bitcoin mining firms available for trading on the Nasdaq stock exchange starting on Tuesday. A spokesperson for Valkyrie told Cointelegraph that the firm's Bitcoin Miners ETF will begin trading on the Nasdaq on Tuesday under the ticker WGMI. According to a 26th of January filing with the US SEC, the investment vehicle will not offer direct exposure to Bitcoin, but at least 80% of its net assets will have gone through securities of companies that derive at least 50% of their revenue from profits from Bitcoin mining or providing the hardware software related to the mining. This is a really weird trend that's going on right now in the cryptocurrency space, and I'm not exactly sure how long it can last. A lot of the companies who have tried over the last 4 years to launch a Bitcoin or a cryptocurrency ETF in some sort of way have been rejected by the US SEC. Their move now is to create ETFs that are loosely tied to Bitcoin in some sort of way, usually going through multiple different cryptocurrency companies, i.e., offering a fund that holds the stock of companies who are mining Bitcoin and then using the Bitcoin thereafter. Therefore, this is an indirect exposure to Bitcoin. We've seen this from Grayscale and a number of other companies over the last couple of months. I'm not exactly, like I said, exactly how sure this is going to last, how long it's going to go on, because no one really wants a bucket of exposure to companies who are exposed to Bitcoin as opposed to the exposure to the actual Bitcoin themselves. But as long as the US SEC continues to say no to people who are trying to launch Bitcoin ETFs, this is going to continue to happen. I think this is going to be very similar to the ventures that we see with a number of companies trying to allow people to be able to buy Bitcoin through them, not buying so much as like buying things with Bitcoin and cryptocurrencies. It sounds like an amazing idea, but no one's going to do it because no one at the moment wants to be that person who lets go with their crypto and then it does a 10x by the end of the year. So yeah, a number of these are launching. This is not the first one and it will not be the last. I think it's the only way that these companies can officially say, hey, we have an ETF that is tied to Bitcoin in some sort of way. The same exact way that we saw people trying to launch the Bitcoin futures ETFs, which are, they try to say, hey, look at what we got, but it's not really the exact same thing. So cool. I would say I wish them the best of luck. I assume this will work out in some sort of way, but they're also a multi-million dollar company, so I assume they'll be just fine. That's the Valkyrie news. And yeah, let's move on. Next up, according to a California-based real estate technology company called Propy, that is Propy, a 4-bedroom home in Gulfport, Florida, will be tokenized, leveraging NFT technology and sold for $650,000 US. In addition to the Gulfport home, another blockchain project has launched aiming to produce or purchase the One Bel Air 105, that is huge, 105,000 square foot mega mansion by creating a decentralized autonomous organization. I'm going to go over this because it's actually really incredible news. That's something that people aren't paying attention to, but eventually this is going to be life. On the 8th of February, a home in Gulfport was auctioned as an NFT, according to the homeowner Leslie Alessandra. The current owner told the Tampa Bay Times it will be the first U.S.-based real estate sale to auction a home in NFT form. Alessandra is working with the Palo Alto-based company Propy, a firm that sold Michael Arrington's flat in Kiev via tokenization. The tech founder, Michael Arrington's apartment, was originally sold in 2017 in one of the first blockchain real estate deals. Said, I'm very excited to have bought the first real estate NFT from Michael Arrington with Propy. In the case in Florida, Alessandra is the founder of a Tampa Bay blockchain startup and a real estate investor. Alessandra insisted that the NFT allows the owners to sell the home as quickly as a Venmo transfer. According to the report, the NFT will also feature a mural created by a local artist, Derek Donnelly, otherwise known as Saint Paint. Wonderful. One of the really cool things about the future that's going to happen is not only and I mean, it depends on how you look at finance, the digitization of everything, the NFTization of everything, but also the speed at which things will be able to be done. If you've ever purchased a home before, an apartment, not residential, what's the word? Some type of an investment property, you know the annoyance that it sometimes takes a month, 3 months. Some countries it takes 6 months to be able to actually work through all the paperwork. And it's basically about 7 people signing something, and then you have the final signing contract. You all sit together. You read through it together. It takes about a good hour and a half, yada, yada, yada. You sign it. You get up and leave. Cool. It's yours. You get the keys. Part of the issue is it shouldn't take that long. Nothing on this planet actually has to take that long anymore, especially not even just with blockchain, just with simple technology that we actually have. If all these things can be written inside of a smart contract and simply executed immediately at will, like let's say, for instance, you see this house right here. Bam, you want it. You really, really want it. So you pick up your VR glasses, your headset, whatever you have, and you go into the digital metaverse world and you go look at the entire property in its entirety. It has very high quality photos. You can see everything on the wall, every single crack, every single thing. You look at everything. You're in about a good hour and a half and you don't have to wait or make an appointment to go see it. Like, you would normally have to say, okay, we can fit you in next Tuesday. Nope, you can do it right now immediately. You look at every single thing. You look at the actual report because they've had a professional look through the entire house, take photos of the entire thing. You know every single crack, every single thing that's wrong with it, every single thing that could potentially go wrong with it in the future. If it's near a lake, if it's near water, if it's near a volcano, you can read all of that right then. Even more so, should you buy said property and something is incorrect that was in the actual thing, well, guess what? You have the right of way because you have all these things that showed it inside the blockchain. This was not mentioned, and I see this is actually happening inside of the house. Well, therefore, once again, you can probably get a pretty penny from that. Bringing it on back, the entire idea is it doesn't take months to do all these things. It maybe takes a day. You can even have a digital lawyer or an actual lawyer look at the exact same thing with you. Say, this looks really cool. It looks pretty nice. You have your wallet already connected to that real estate platform, your digital cryptocurrency wallet, and you go, cool, I want to buy it. You click buy. Guess what? It's yours immediately, instantaneously, because it's on a smart contract. Everything simply goes to you and it can be verified. Even if you decide to link your bank account with the actual cryptocurrency MetaMask wallet thing that you have also attached to your cryptocurrency thing on the real estate website, the moment you buy it, all the information goes to the bank. So there's, everything can be completely hyper verified. It's yours. It doesn't take a very long time to do all of these things. And this is what the future of real estate is going to be like, especially when it comes to like actually viewing an apartment or viewing some type of property everywhere. Normally, if you want to get like property viewed by other people right now or by yourself, you have to like hire a team to go look at said property, take photos and send pictures and videos back to you. And then you can kind of see what it looks like. The other really important part is this is when it comes to the NFTization of things. Once again, a lot of people still are not understanding. They think that NFTs are only pieces of art. No, it's anything that has value that is digitized and put onto a blockchain. Same exact thing with the home. I'm sure it confused a lot of people when they heard an NFT home. They think that they can kind of walk into this house in the metaverse. No, it is the actual physical home, but all the ownership of it is on top of the blockchain. The really cool thing about the ownership is it can be fractionalized by you at will, whenever you want. So let's say you are renting out this home. I don't know the cost of renting out this home. Let's say you're renting it out for $3,000 per month. I know it's overvalued, but cool. Let's just go with $3,000 per month. And at some point, you kind of want to liquidate some cash because you have a bunch of other things that you want to get into. You fractionalize the home into 3 pieces. One of them gives you 51% of the house, and the other one have 49%, and you cut those 2 directly in half as well. And you basically go, hey, anyone looking for a portion of a house to buy? And 2 other people go, hey, meet right over here. 2 other people buy those fractions of the house. And every single time that rent gets put into the actual house or someone is paying for the rent of the $3,000, you get 51% of it and they get the other portion of it as well. So you are still a 51% owner of said home, but you are, equally or mathematically owners of the home as well. This is huge because at any point, any of the other owners, if they own, 33% of the actual home or 25% of the 24% of the home, they can take their portion and fractionalize that into 24 pieces as well. And then have 24 other people who would not normally be able to spend $650,000 on a piece of property. Maybe they're able to put $15,000 into a property. Then they actually become actual landowners. Like I said, it's a bit dystopian depending on how you want to look at it, and the idea of not being able to ever own an entire home, but ownership still in this kind of right. I think this is going to take a lot of people by surprise because a lot of people who even are within the cryptocurrency space don't understand exactly what this technology is going to be used for and exactly how it's going to digitize everything of value. So anyway, without spending too much time on it, this is kind of cool. I assume it sold well for the amount of money that they were trying to get for it. But this is happening all over the place. If you saw one of the other videos on the other channel, I was talking about that before. I think a lot of it kind of, not that it goes over people's heads, but I think it's not as exciting to them as maybe the prices within the cryptocurrency space. But in the future, I mentioned before, if you actually own a physical property and you are the sole owner of it, that is going to be incredibly rare within the next 10 to 15 years, especially as you are able to sell off fragments of the home to other people. Anyway, that's the Florida real estate news. Not really sure. Yeah, let's move on. Next up. Former Manchester United legends Gary Neville and Paul Scholes are teaming up to launch a one-of-a-kind. This is actually really interesting. a one-of-a-kind, sports-centric, decentralized autonomous organization that would allow fans to make investments alongside these legends. The sports investment DAO would be called CO92 DAO, named after the legendary squad from 1992. And it would focus on strategic investment focused on soccer-related firms and projects. The two soccer legends, it's weird to say soccer, have teamed up with a Singapore billionaire Peter Lim and his son Kiat Lim to create the decentralized autonomous organization. They said, we are currently already reviewing a range of professional football project opportunities and will announce developments in the months ahead. This would be the second blockchain venture for the father-son duo. They have already launched. The details of the project are yet to be revealed publicly, but it is expected to hold a public sale soon, as per Bloomberg. The management team would include Neville and Scholes, along with other former teammates, namely Nick and Ryan Giggs, the football-centric... There we go. Here's the most important part. The football-centric venture aims to bring sports ownership to the masses using DAOs. So the idea is, and this is actually quite interesting, it's the same exact thing with the idea of kind of tokenizing everything. Have you ever seen when a rich person has bought a sports team, or when they decide to, hey, I want to buy this thing that would be beneficial potentially either for them or for something in the actual sports team? Imagine a situation where these two guys are the heads, not the heads, if you will, but the creators of a DAO that you can also enter. And they say, hey, we are trying to raise $47 million to buy this sports team. Anyone can join in. You put money into the DAO, the same as tons of other people putting money into it. They raise enough money to be actually able to buy this other team. But guess what? You actually put money into this DAO. You are now an official partial owner of the team that they bought. You are registered forever on the blockchain within the DAO as one of the people who owns a fraction of this team. Every time, now, I mean, this is a bit far, but here's how it should actually work. Every time that a piece of merchandise, every time they win a game, every time something would flow to the normal owners of the team, monetary-wise, that they get from the team getting better and better and better, you also get a portion of. Forever. That's why it's really crazy. Like I said, it's this really weird idea that we don't have to digitize everything, but we are, because that's just where the future is going. But the idea of ever owning a sports team or a fraction of a sports team for any normal person is completely out of the range of possibility of what's actually going to happen in life. Now imagine a situation where you're not a millionaire, but you still own a fraction of a sports team. You actually have a say in this decentralized autonomous organization. What happens with them when people are voting? Should they do this? Should they do that? How do we change their outfits? What do we do for so-and-so situations? You have a say in all of that. So not only do you own fractions of multiple teams, you also own fractions of multiple properties around the world. This is what NFTs and DAOs are going to do for everyone out there. So I saw this news. I thought it was this was also, slightly popular news. I think it only made popular news because of Manchester United. And besides that, I think it probably would have really fizzled out. But this is something that a lot of people, not that you should be looking into it. Rather, no, please by all means do. Do your own research always. Like read as much as you possibly can. Education, good for the mind. It's absolutely amazing. But people really don't get what's coming, what's going to happen, and exactly where this is all going to be when you can literally own some of everything. This is one of the conversations that we had. I'm sorry if I'm talking too fast. Very excited. It's one of the conversations we were having in 2018 when it came to the fractionalized ownership of cars. If you remember, in 2018, there was a lot of discussion about self-driving cars, but I think 2020 put a bit of a damper on a lot of that stuff rolling out when it should have. And the idea is that, let's say you have a self-driving car, and during the course of the day when you're not using it, you simply, tell it to go drive itself and to be an Uber and pick up a whole bunch of people. If you own that car with 5 other friends, not only is the car driving itself around all day, every time that someone takes that ride, you and all your friends get an equal portion of that car, or of the fee that you're getting from someone actually driving that car. Even more so, it's self-driving and it has a computer inside of it, and it knows when it actually needs an oil change and all these other things, and it simply drives itself to a mechanic. Like, it's really, I think a lot of people aren't ready for the future. I'm just being completely honest, because I think it's going to be quite weird and a lot of people aren't going to be able to deal with it immediately. But yeah, this is absolutely incredible news. I wonder when this DAO launches, what they're going to be announcing that they're trying to acquire. Do you remember the other DAO? One of them was trying to buy a copy of the US Constitution, and I was like, why? Imagine trying to buy a sports team instead. What was the other one trying to do recently? There was another DAO that was trying to raise money to buy, was it property somewhere? I don't remember exactly what it was, but yeah, how cool, right? That's the Manchester United DAO news. And yeah, let's move on. And to finish things off, network congestion on the Ethereum network is a very real and very strong problem, which has in turn brought about many more real and pressing issues. Users of the network, especially small-time investors, have drawn the short end of the stick with these issues, as they are the most affected. With fees skyrocketing, carrying out small transactions on the blockchain has become less and less feasible with every passing day. This is why, once again, we keep hearing about Polygon. Whenever I mint stuff now, I only mint it on Polygon because it's the, would I rather have $800 worth of fees or zero fees? The high fees and congestion have sparked discussion on how it can be eliminated. There are various developments in the pipeline with the consensus layer, known as Ethereum 2.0, and other suggestions made by developers this time around. It's the founder, Vitalik Buterin, proposing a way to deal with the network congestion and by extension, the high fees on the network. He has suggested something called blob carrying transactions. This feature would be added to a hard fork that would take place in the near future. This was explained by Buterin. The blob carrying transactions would allow for higher scalability for rollups in the meantime before the complete move to Ethereum 2.0. It is basically a stopgap using until sharding is implemented on the network. The new feature would be connected to both the beacon block and the consensus node that are coming to the network. If all that sounded completely confusing, I think it's supposed to, because this is just how developers talk. So yeah, a lot of proposals are being put forth. You might even notice when we talk about Ethereum's recent price movements, we are relatively close to Ethereum 2.0 now. I refuse to call it the consensus layer. It's been called Ethereum 2.0 since 2016. It's going to remain Ethereum 2.0 for me. We are around anywhere from 18 to 20 weeks away. I know, it's kind of weird, right? From it actually happening. It's been years in the making, and we had the news that by the end of Q2, we would have Ethereum 2.0. The idea is that even with Ethereum 2.0, fees will remain. They may be lowered. However, if we have any type of hyper network congestion once again, fees are also going to begin to pop back up. And this is why I do actually believe that Polygon is going to be a very strong figure in the cryptocurrency space when it comes to the idea of Ethereum can do a lot, but it can't do everything. So we have to have another layered solution. So as of now, this has been proposed. We are going to have blob transactions on Ethereum. I wish I properly understood what this meant, but as long as transaction fees are lowering, I think that's kind of the best point. Yeah, really weird. I mean, Ethereum will succeed, and I think in 10 years, we're going to have some really crazy documentaries discussing all of the things that we simply did not know, but they really got to get it together, because I don't know. I think it's time for Ethereum 2.0. Alrighty. Let's move on. Yeah. I do hope, wow, that's like no transactions on Bitcoin. I do hope that you've all, they're all inside the bus. I do hope that you've all enjoyed. I do hope that you all are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. I don't know why I can't stop looking at the screen. Thank you all once again for watching, listening, and or supporting. And I will most certainly be talking to you all soon. See you.